For TraderInsight.com, I'm Adrian Manns, and I want to talk to everybody about a semi-complicated order type that you can use to ensure that you're not going to wind up stuck in a stock overnight or over the weekend. And you just have to wrap your head around a bunch of this stuff. So let's get right into it. Here we're looking at a RealTick market maker montage and a 5-minute chart. Now, what I would like to do is just go through quickly how to structure a basic order and then talk about how to make the order custom tailored so that certain things happen at certain times of the day. So first off, let's say that you're getting into a trade with a limit order. Everyone should understand that if what I want to do is short this stock at 117.52, then I can set up $117.52 limit and click the short button. When I do that, my order is going to go live, and if the current price is 117.52, I'm going to get filled immediately. If the current price is up here somewhere at 117.60, let's say, I'm going to get filled immediately, and I'm going to have my short sale happen at a higher level, because when I put that limit order in, that's telling RealTick that I want to get short all the way down to 117.52. If price is under 117.52 and I put a limit order in, it's going to have to come up to my price and then fill me once the price is back in the range. So when you do a limit order, if your price is currently marketable, you're going to get filled immediately. And what that tells you then is that for the purposes of our style of setting up these trades, you want to use something called a stop limit instead, because if you have a short at 117.52, you don't want to get filled when it's trading up at 117.60. You want it to come down through your price so that you get your confirmation and then fill you once it gets there. The way to accomplish that is to set up a stop limit order. So a stop limit order is going to tell the software that when price gets to the stop price of 117.52, you want to execute your entry, and let's say you're willing to take a slip down to 117.47. So right now what would happen is if price was trading above 117.52, the software would wait for price to come down to 117.52. When it hits 117.52, it's going to sell KMB short all the way down to 117.47. So any price available between 117.52 and 117.47 is where I'm going to get filled. That's how limit and stop limit orders work. Now let's say on the exit we want a stop market order. And don't worry if that drop-down box looks different than it does in your software. Different order routes have different order types available. And you just need to check to see what the different order routes that your broker has are going to supply you with in terms of order types. So here's a stop market order. Let's say our target on this is a move back down to $117.20. And when it hits 117.20, we want to get out immediately, and we might not be at our machine when that happens. If we use a stop market order instead of a stop limit order, then what's going to happen is once price hits our target at 117.20, we're out. We might not get exactly the fill that we want. We might get a better fill than what we want. It's not typically the case, but you get any fill that is available when 117.20 hits is what you're going to wind up with. So the stock trades lower, trades lower, trades lower. When it gets down to $117.20, your market order goes live. And if you get filled at 117.20, then great, but you're willing to get filled anywhere the stock trades next, which would probably be up a little bit higher. You might get filled 117.30, 117.35, but you just want to make sure that you're getting out of the position because maybe you're not going to be at the machine when that price hits. In this next row, we see a box called Time and Force, or TIF. It says day. A day order just means your order will stay live for the course of the normal 6.5 hours that the market is open. If you change this to day plus, what that does is says it'll be active in after hours trading as well. And if you say good till cancel GTC, that order is going to stay live over the course of multiple trading sessions. That has nothing to do with the position that you take in the stock. If you have 1,000 shares short and the day goes out without ever hitting any of those prices that you've put in, So it never hits your profit target. It never hits your stop loss. It just goes out right around 117.52 or 117.20. You're going to wind up owning this stock overnight, because time in force only refers to the order. It does not refer to your net position in KMB. So let's say that what you want to do is control whether or not you're in a position going into the closing bell. If you click on this conditional order box and then say cover, the first thing you can do is set up your price trigger and say that if the last price equals 117.20, because that was your profit target, then buy Kimberly-Clark, stop market 117.20, and place your order. Problem here is this order is just going to run right into the end of the day. It's going to be a good till cancel order. Here's what we've got as the expiration. So if you don't get filled by the end of the day, it's just going to hold over. But what you can do is a condition expiration time. And if you make this condition expiration at 1550, now what you've told the software is, if I'm in Kimberly-Clark and I'm on my way to the profit target, get me out at 117.20 unless we get to 10 minutes before the closing bell, in which case I want you to cancel this conditional order. Then when you click buy, your order goes live on your computer, and as long as your computer's on, this order will execute if it hits the profit target, or it will take the order off your book at 1550. So at 10 minutes before the closing bell, it'll cancel this. So now at 1550, you won't have an order at all. So how do you deal with that? The way that you're going to ensure that you're not stuck in a trade overnight or even over the weekend is you're going to create another conditional order. And in this case, it'll be a time trigger. And the time trigger is going to say that at 1551, right after that other condition expired, you want to buy Kimberly-Clark at the current market price. So 9 minutes before the closing bell, what's going to happen is you're going to get closed out of KMB, and you're not going to wind up in an overnight position. This doesn't give you as much control as you have sitting in front of the computer, certainly, but it does give you a way to automate your exits and make sure that you are flat going into the bell. You don't have any open positions, any shares of any of the stocks that you were trading. Because don't forget, when you close out a position before the end of the trading day, that money is then available again to trade with immediately. If you hold that position overnight, your margin changes from 4-to-1 to 2-to-1 for that particular chunk of resource that you've allocated. And then when you close the position out the following session, you're not going to have access to that capital immediately the way that you would with an intraday trade. You're going to have to wait for the clearing firm to settle the trade before you get your money back, just the same way you do in your investment accounts. So this video is a response to a very specific question that I received from one of our friends, and I hope that it explains pretty clearly the way that you have to structure these orders. If not, shoot me any questions at adrian@traderinsight.com. I hope you had a great trading day on Friday and an even better one on deck for Monday. It's the best trader education anywhere, only from traderinsight.com.